The shape of the office market is actually pretty good indeed, and I think when we were talking about the office market, the occupier side of things 3 years ago, we were talking about a disconnect between investors and occupiers. I think we can now definitely say there is a reconnect between the two, and I think we can talk about that for almost every country in Europe, which I think is a first for this year. I think for investors it's very important now to care about the occupiers, probably more so than in the last few years, because if you look at where we are on the pricing side on yields, we're pretty down low. We're at record lows in probably every market in Europe. So in that respect, I think you have to acknowledge that probably we're not going to see the same kind of yield compression that we have seen in the past. So therefore you need to see some of the capital value growth coming from the occupier market through rental growth, and as we are seeing this year, that market has very good momentum. So we're actually quite positive that there is something left. What is left in this cycle? Well, I think if you look at the UK, which is probably the market which is furthest ahead in this cycle, we really saw this only taking off by the end of 2011, 2012. So if you then take where we are now, we're only about 4 years in at a very positive market. So you would argue that there's a little bit more left. But I think most of that will come from rental growth. And if we look back to some of the previous recoveries, we always saw that after 3, 4, 5 years into a cycle, we saw that acceleration in rental growth, and we haven't seen that yet in any market almost in Europe. So we definitely expect rental growth to come, and maybe we are underestimating a little bit how big that could be. Well, 2016 I think will also be a good year, because unless we're going to see some very unforeseen political changes, and of course Brexit might be one of these things that make people nervous, but if you look at the underlying fundamentals for the market, I think occupier markets are likely to continue to be very strong into 2016. But if we look at what investors are doing, there are two things. They still are very selective. They're not buying anything just because they need to buy real estate. They're very, I would say, selective in where they buy as well. Another thing what we see is that they don't want to make any concessions about quality, so it's very unlike 2007, where we saw a lot of people buying just anything, repackaging it and selling it on. So in that sense it's a disciplined market, and I think we'll continue to see that, but also means that we don't see that very big push, but I think we're looking forward to a very good strong market in 2016 again.